Hello traders and welcome to another video review. Today is Friday, December 2nd, 2022. Let's find out what is going on the Forex calendar today. As you can see, we have plenty of important data release for Friday. This is the first Friday of the December, so the key event of today is of course the Non-Fatm Payrolls data from the US, scheduled for release 3:30, and the market expectations are not too much sophisticated. The previous reading was 261,000. This time the market participants expect the level of 200,000 new jobs to be created. Of course, together with the non-farm payrolls comes the unemployment rate in the US. It should stay at the same level of 3.7%. More data comes from the Canada as well, in form of the employment change, scheduled for release at the same hour, 3:30. But before all of that will happen, there are some data or events already published. Retail sales from Australia had been published, minus 0.2%, just as the forecast. And of course, we got some speeches from the ECB Lagarde and the Reserve Bank of the New Zealand governor, or they already spoke. So apparently the London session doesn't look that busy anymore, so we are waiting all for the non-farm payrolls. So let's find out what is going on charts, and we are going to start with the US dollar. The US dollar index daily time frame chart is showing us another leg to the downside being extended towards the level of 103.54. So it looks like this W, X and Y pattern is getting overstretched. As you can see, right now the wave Y target is located at 103.54. This is the low from around the 2022 19th of the June. So this is this year. Apparently almost half year ago this low was made. Nevertheless, if we take a look here on the whole trend that started, let's say in the beginning of the January 2021, we can easily see that this is just a hefty correction. However, it's getting very deep. So it looks like the market participants are positioning themselves for the decline of the US dollar. The next target is of course 103.54. So it might looks like not really good period for the US dollar bulls. In order to return to the uptrend, let's say, the market must break first above 107.88 around here, and then above 109.27. Without breaking above those two levels, we cannot say that the US dollar index is back to the uptrend. Momentum is weak, momentum is negative, which supports the short-term bearish outlook for the US dollar. Similar situation can be found on the US dollar to the Swiss franc daily time frame chart. As you can see, after the ABC to the upside, there's three waves to the upside that were completed around 1.0148. We broke out of the channel, of course, and now the market is moving very dynamically lower. We broke below the technical support at 9,373, which is very important technical support level. So we are moving away from the parity right now. So the next target for bears is located around 9,197, 9,000, yes, somewhere around this level, 9,197, 9,153. Those two levels might be might be considered as a technical support. So this is the first one, and the other one is around this level. Nevertheless, if you take a look at this chart, you can easily see that we are going back towards the zone where the market likes to be for extended period of time. So the bulls and bears are trading this kind of a zone for the extended period of time. There is a breakout, pullback, breakout, pullback, up and down, up and down. So this trend on the US dollar to the Swiss franc is not that strong. It's not that strong as the trend on the US dollar to the Japanese yen, for example, or the euro dollar or any other one. So it might look a little bit overstretched right now to the upside, which is why we got this very big decline here. So what do we have here is a continuation of the down move, and it looks like 9,197 is the next target for the US dollar to the Swiss franc. US dollar to the Japanese yen is behaving according to our chart as well. If we zoom in, we can clearly see that the market doesn't like the higher prices, and despite the recent bearish divergence, as you can see right now, this divergence is gone. I mean, it's not that strong anymore. However, it's still present on the chart, but the wave A is getting extended, especially in the wave 5. So what we are waiting for is the termination of the wave A, and in order to this, the market must do the wave 5. So this is what we are waiting for. Then of course we are waiting for the bounce in wave B, and then possibly the wave C will follow. The market looks very impulsive, very aggressively positioned to the downside. Right now, the lowest level we have hit today is 133.57, and the target is 131.50. so that's over 300 pips lower. It doesn't mean it will be hit today. However, it really helps to be focused on this level, because it's a very important technical support. As you can see here, it's a low for the wave 2. Okay, so maybe this level will provide again the technical support for bulls during the very extended down move on the US dollar to Japanese yen. So if everything related to the US dollar is coming down, what then is euro dollar doing? Because euro dollar will be definitely affected by the Non-Fatm Payrolls data release, and as you can see on a daily time frame chart, the US dollar keeps moving up. Let me just switch to the 4-hour chart. Just as expected, this chart is still valid. Just as expected, the market keeps moving up, keeps moving towards the level of 1.0623. This is the extension level. There is of course the technical resistance 1.0608, 1.0626, and it looks exactly as expected. So those two levels are now the technical support for the market. There you go. This is the old high of the wave 3. It's a support right now, and the market extends to the upside. We are waiting for more upside. Maybe during today's Non-Fatm Payrolls data release we have a spike up, and then we will see. Nevertheless, target for the wave 5 is being expected. Let's just focus on this level first, and then we will see what will be the next outlook for the euro dollar. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.